Well, as we count down to the budget on the 1st of February, CNBC TV 18 has been speaking with business leaders from across the spectrum to get a sense of what they want from the Finance Minister. And today, we turn our focus to a key growth driver of the economy, the startup space. 2020 has been an unprecedented year for startups in many ways. While on the one hand, we've had a whole host of founders tell us that it's in fact turned out to be their best year ever, on the other hand, a large number of startups have faced existential challenges as working capital dried up, supply chains were hit, and an altered consumer mindset hurt the bottom line. Entrepreneurs are now hoping to make a post-pandemic recovery and are looking to the government to help in getting their businesses back on track by simplifying policies and bringing in investment-friendly regulations that could help ease access to capital, pull in domestic capital, and improve the ability to attract and retain talent, and of course the much-awaited clarity on the overseas listing norms that will allow them to unlock value. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan, and before I introduce my guests for this evening, let's take a look at the policy report card of the startup sector for 2020. My colleague Mugdha Warrior sums it up for us. Mugdha.
Here's a quick look at whether the government delivered on the announcements made for startups in the FY21 budget. Well, first up, the Finance Minister had promised a seed fund for early-stage startups in her budget speech, and that came through when the Prime Minister on January 16th of 2021 announced a 1,000 crore rupees startup seed fund, but it is still to be implemented. The government deferred taxation on ESOPs by 48 months and also extended the period during which a 3-year tax holiday can be claimed by startups to 10 years from 7 years. However, these are only applicable to startups that have received a certification from an interministerial board under the DPIIT, and so far, only 329 startups have received such an IMB certification, even while over 42,000 startups have been recognized by DPIIT. The demand by the sector, of course, is to extend these benefits to all startups and, more importantly, to tax ESOPs only at the time of sale of shares. The Finance Minister had also proposed an investment clearance cell, and while that was not meant for startups alone, the Finance Minister in her speech had mentioned this as a means to boost entrepreneurship and provide end-to-end support to facilitate clearance at the centre and the state level. This cell is still to be launched, and government sources say that they have started onboarding the states and it is likely to be launched by early FY22. The government also made important announcements for the e-commerce sector. It proposed that e-commerce operators deduct 1% TDS on all payments to sellers. This came into effect starting October 1st of 2020. The ask by the industry is to lower the TDS. The government also proposed the equalization levy of 2% on e-commerce transactions by non-resident e-commerce companies. This came into effect starting April 1st of 2020, with the first installment due on July 7, 2020. Well, that was a quick status check on some of the important announcements for startups in Budget FY21.
Well, thanks very much, Mugdha, for very comprehensively summing up the promises made in the previous year by the Finance Minister and what has been taken forward. To take the discussion forward, we're now joined by Abhiraj Singh Behel, the co-founder of Urban Company, Karthik Reddy, the vice chairman of IFCA and co-founder and managing partner at Bloom Ventures, and Padmaja Ruparel, the co-founder and president of the Indian Angel Network. Padmaja and gentlemen, many thanks for joining us here on CNBC TV 18. It is our annual meeting ahead of the budget where we size up the asks from the government. So Padmaja, let me come to you because you liaise with many arms of the government. Mugdha very clearly articulated some of the wish list that has been acted upon and many that continue to be pending. As we go into a year where the hope is that the focus will be on recovery and aiding recovery, what are the specific asks of the startup ecosystem?
Thank you, Shireen, for having me on the show. And yes, we look forward to a very pro-startup budget for sure, as usual. Optimism doesn't fade. I think there are two major issues that face the ecosystem. One is really what 2020 has shown us, and this is completely aligned to what Honorable Prime Minister talks about Atmanirbhar. I think it's very, very important for us to unlock domestic capital. I must say that, the government has made a great start with the fund of funds and then the 1,000 crore fund that was announced on 16th of this month, which I presume the details will come out soon, or how it's architected. But I think what is more important are two more points. One, I think, is that investments from corporates, from HNIs, from family offices, enabling that is absolutely key. And interestingly, this sector is, these investors are very keen to invest. So how do we make an enabling ecosystem so that there is domestic private money unlocked? You know, whether we look at parity of capital gains tax with publicly listed company shares, or we look at ease of shareholder agreements with entrepreneurs so that, you know, investors get are able to exercise those. And how do we unlock all of these things to make domestic money available? The second part on domestic money is really to have institutional capital like insurance companies, which will need some amendment on the IRDAI rules, pension funds to invest, even organizations like NABARD to put in, let's say, 5,000-6,000 crores to activate the agri-tech ecosystem. On the other hand, foreign money is very welcome in early stage startups. I mean, startups are high risk. It's very, very key to fund them well. And we have been able to attract, but I think there's a lot more that we do. We are not competitive with the world, with the global ecosystems. How do we get foreign investors to invest? I mean, look at Indian funds. We are challenged. We are uncompetitive when we go and raise money overseas because we have our tax systems, our expenses, they're very different. Getting returns out of the country is very difficult for overseas investors. So simplifying the process, in some ways, cleaning up our processes, cleaning up our tax issues will really attract good foreign money. And I think India is poised extremely well. We are the fastest growing ecosystem. We have a slew of unicorns that have happened. We've proven our market. We are growing. We need just this little thing to unlock capital, both foreign and domestic, and make this ecosystem get that money in. That, to me, is most important. I mean, we cannot have our Indian funds being uncompetitive with foreign funds investing in India. Doesn't sound right to me, for instance.
Okay. Okay, I want to get into the details of that in just a second, but let me address that issue that you raised about domestic capital with Karthik Reddy. Karthik, you know, for years now, we've been talking about this business of unlocking domestic capital. What, to your mind, is still holding it back? Is it the capital gains requirement, the capital gains ask of the lack of parity that is the #1 deterrent? What is stopping Indian family offices, Indian HNIs from putting their money into the startup ecosystem?
No, you hit the nail on the head, Shireen. So basically, much like, you know, the VC ecosystem is on the verge of, for the first time, delivering, you know, massive cash outcomes back to its backers over the last decade. The Indian HNIs have seen capital. Some of them have seen, but we haven't seen a mass of them come into the ecosystem because they're wary of, you know, long-term risk of this nature, and they know it's a hits business, so they don't want to necessarily be in one, in 10 companies and miss out on the one big hit that they
So that's the point that I'm trying to get at. Karthik, that's the point that I'm trying to get at. Is it a lack of risk appetite? Is it a poor understanding of the way that the startup ecosystem functions, the low visibility on returns? Is that the issue, or is tax the issue?
No, so it's related. So for the risk you take, you want your returns to be higher, not lower, right? And apples to apples, if you actually are generating slightly better returns as well in this risk category, you don't want to lose that out on a tax disadvantage to public market entities, right? As if someone is creating a basket of equity risk, you don't want that to be weighted in favor of public, where you're buying with maximum information versus buying into startups with very little information and suffering that disadvantage. So we want to help them channelize this into potentially professionals, which is people like us who aggregate this into pools of capital and act as fund managers with the same risk. The challenge stays the same because you still charge the higher bracket of capital gains tax relative to the public public markets. The corollary to that is we've also been saying there are times where, if you've created all sorts of other tax holidays for various boosters to the ecosystem, please appreciate that this is such a long-term asset that what you're foregoing is capital gains to be made in 2030 if you invest today, right? So we've also made a request to the government to a 2-3 year window, because there are two dimensions to it. Unlike any other time in history, everybody is focused on their own equivalent of Atmanirbhar, right? So American investors who can't catch planes are limited to come and look at early stage risks. They might invest in an Abhiraj, who's already a unicorn and well established, but they will not come and look at a Series A or B company without catching a flight, right? And so if you're constrained on foreign capital, you need to boost up domestic capital even more into fund managers, right? And you're not doing them a favor by creating a disadvantage relative to public markets. And love the fact that the government sets up more fund of funds, but please understand the fund of funds need to be leveraged with other capital. And you have to create advantages for that other capital also to come from domestic sources. And only 75% of it has to come from other domestic sources. That's not easy. And doubly so for fund managers to travel out today and pitch for overseas capital has become difficult. You can't catch a flight, right? And so you have to be able to double spurt the ecosystem this year like never before.
Okay, well, those are some of the practical challenges of trying to draw in foreign capital given the pandemic at this point in time. But I think the larger point is what will it take to actually unlock domestic capital, something that's been on the wish list for long, and maybe that parity on the long-term capital gains tax that you speak of. Again, not new, not something that's been put on the table for the first time this year. But Abhiraj, I want to come to you now, and let's talk about the second specific issue that seems to be coming up on the budget wish list for 2021, and that has to do with ESOPs. And I know that, this is something that you're betting big on, Abhiraj. If the finance minister is listening, what is the pitch on ESOPs?
Shireen, thank you very much for having me. The pitch is very simple. Today, as an employee in a startup, I am taxed twice. I am taxed at the time of exercising the ESOPs, and then I am taxed at the time of selling the ESOPs. And this is unprecedented globally. The best jurisdictions across the world don't have this practice. What it ends up doing for employees is that when they have to exercise the ESOPs, they have to coffer up a certain amount of money in taxation without having any line of sight of liquidity of those ESOPs. And as a result, many of them end up foregoing their ESOPs. And we know that ESOPs is the currency that startups use to recruit talent and grow further. So this is a very, very key point. I think the point was well understood by the finance minister last year. However, the relaxation was only provided to a small set of startups, as Mugdha mentioned. This relaxation needs to be extended to all the 42,000 startups that are registered with DPIIT. That is the simple ask.
Yes, and I think not just with ESOPs, but, this whole business of setting up that IMB, which will then clear or certify your startup worthiness and then link the incentives or the relaxations to that. And as we were pointing out, barely 329 companies are being able to avail of some of those incentives versus the 42,000 that have registered with the DPIIT. But, Padmaja, you've, of course, you were there when we raised this issue with the Revenue Secretary when at last year's budget town hall that cnbc TV18 had done. There hasn't been much progress. Do you feel hopeful that on the ESOP issue, we could probably see some changes being announced?
I hope so, because there has been some movement, right? They have provided a 5-year deferment on tax or on sale or exit, whichever is earlier. But I think the 5-year is not enough. To Adhiraj's point, the reality is ESOPs are given to key management people and you want them for a much longer time. So I think that 5-year is a bit of a problem. But if we've come this far, I'm really hoping that that hurdle will get over. And I do hope in some ways also that, independent directors and mentors are also sort of we can architect something for them to get ESOP kind of thing. Because if you look at it globally, this is part of it. I mean, startups do not have the high quality management that they need purely because they don't have the cash. But if they can surround themselves with good mentors, with good independent directors, advisors, and engage them, then they can build very high quality companies very quickly. So that's the only currency that they have. So in that sense, I think we need to look at ESOP a little holistically as well. And I'm hoping the government would.
Well, let's hope so. The other issue that is pending from last time around, the announcement was made by the Finance Minister on direct foreign listing by Indian companies, but we are still awaiting the fine print, the guidelines for that. Karthik Reddy, I know that there's probably been a lot of consultation with the government, with various arms of the government on this issue, and the hope is that perhaps the budget will unveil the roadmap. How confident do you feel, and what is it that you would like to see on that front?
No, I think more confident than ever before. I think primarily because they realize there's a lot of capital unlocking, value unlocking, wealth unlocking that can happen with 30 plus unicorns sitting in the country and having a lot more appetite globally for those kind of assets, right? And so it would be the right measure to be able to see that capital unlocking, because it then sets a trend line of actually seeing exits in this ecosystem at massive scale. And I don't think limiting it to a domestic market only IPO should be the end state. And so we are hopeful that it'll move in that direction. That's one point. And I think what happens then is you start getting benchmarked to the global best companies in that particular sector, right? India is still a nascent technology market in terms of listed companies. So the benchmarks are literally you can count off on one or two hands. Whereas if you look at global markets, then we could be benchmarked against much larger companies, which is why the buzz around Zomato being benchmarked against DoorDash, and maybe urban company will get benchmarked against the equivalent of an Instacart, or anybody who's in the service hyperlocal market in a global environment. I think that's very important today, given that we're building new age businesses, and we will eventually get back to building a very robust listed base in India as well. It's inevitable. But the argument is not that. The argument is to accelerate it. And I think we have a huge opportunity sitting in front of us. We're not in 2012 making in 21, and we think by 25 we need to grow into that or have a shot at that $5 trillion economy. All of these are aiding mechanisms to accelerate.
Yes, there is a need for acceleration, and if we go by the buzz on the street, then at least as far as 2021 is concerned, there seems to be a robust pipeline lined up in terms of IPOs, and awaiting clarity on this particular issue. But Abhiraj, I want to come back to you now, to talk about some of the other regulatory challenges that you believe the government may need to remove to really try and accelerate growth, especially given the context of the pandemic. What are the key pain points, the key pressure points that you continue to deal with, where you would like some help, some assistance?
Shireen, I think outside of the 2 points that have been mentioned around overseas listing and ESOP reforms, there are a couple of more points that I'd like to highlight. Starting with just an overall change in ease of doing business. Let me take an example of GST, which is our most recent, regulatory change, very, very technologically enabled taxation regime. We file as urban company every month 48 different GST filings in India. Compare this with our operations in Singapore and Australia, where also GST is in place, and we file only a single return. So this is one example of the headache that comes onto our finance teams in terms of just doing business on a day-to-day basis. Now, as you rightly mentioned, 1% TDS has to be withheld. We also have to then go back and for every single service professional, do that accounting and then relay that information to the government. So the cost of doing business is increasing, and this is an area where the government has to focus. Padmaja spoke about another important point, which is ESOPs to advisors. In fact, for founders and promoters, the Indian law does not allow granting any additional stocks or ESOPs, whether in unlisted companies or listed companies. This is in stark contrast to some of the best companies globally. If you look at Tesla today, if you look at Airbnb, their founders have created long-term stock option plans. And as the value of the company increases, the founders are incentivized with more stocks. In India, I can only retain the stocks that I have on day one. I can't grow my stock holding. So this is another law that needs tweaking and changing. I think these are two large points that I wanted to mention. Another small sort of thorn is around the angel tax. Many companies continue to suffer from angel tax. This is, the controversial section 56(2) of the Income Tax Act, where an angel tax is levied whenever somebody's raising angel investment at higher than fair market value. And all of these things essentially don't promote a good long-term startup ecosystem and are misaligned with the Prime Minister's vision of a digital India and a startup India.
Yes, and plays into that larger issue of compliance and the compliance burden, not just for startups, but for industry in general. But Padmaja, to the point that Abhiraj was making there, and 48 different GST filings versus a single filing in other jurisdictions, as he was pointing out in Australia and Singapore. And this really has been a burden. I mean, you talk to MSMEs across the country, not just startups, but even, medium and small enterprises, and this is the one thing that they raise as an issue. On the compliance side and the regulatory challenge side, would you like to add to anything that you believe requires urgent intervention?
No, I completely agree with what Adhiraj says. There are, the compliance list is long for any startup, for any fund investor as well, for that matter. I mean, we do have a compliance function. Whereas everything is digital and we can make it so much simpler, we can make it so much faster. The issue is really what does happen is sometimes we find that one arm of the government doesn't have access to another or are not going there. For instance, in Section 56, the one that Adhiraj brought up, right? We have scenarios where investors of those companies are income tax payers. Yet, the companies are getting notices to ask for bank accounts and ITRs of the investors. The point is, if we give the PAN numbers, then it should be as simple as... Is this still going on?
Padmaja, is this still going on? Because, we thought that this ghost had been put to rest. Is this still going on?
I think it's reduced, but honestly, I think there is an administrative, stricter implementation that is required, and I think that will go away. But the point is more larger, Shireen, is why is that required? When there is a filing happen, the PAN numbers of the shareholders are available on ROC. We can easily pull those details out of the system, right? The reality is investors, especially angel investors, or for that matter, all of them are holding very small shares in a percentage in the company. So it's very insignificant. They are not going to, these investors are not going to give their entire income tax returns to these young companies and startups. They are happy to give it to the income tax officer, for sure. But they're not going to give it. So, things like these can be clearly cleaned up. If you look at RBI, okay, how can we simplify the approval process for overseas investors? I mean, that approval process can take as much as 6 to 8 weeks, if not 12 weeks. Now, it just impacts the IRR of the overseas investor, right? So there are things that can be cleaned up. If you look at M&A, today, the M&A process, and I think the good thing that has happened is M&A has begun in the country. We are seeing a lot of activity there. How can we reduce the time on NCLT? It takes 6 to 9 months to get an M&A process closed. If we look at Section 281 certificate, right, it's a very difficult one. We at IAN have actually lost a M&A transaction because of this single issue. I mean, to get Section 281 certificate from 35 investors, It's going to take time because it goes to the authorities. So I think can we solve them? I think so. We have to think innovatively, and I think there are recommendations, but we need to solve these. I think Adhiraj has brought up a very critical point. Unless and until we clean up our reporting, our processes, and we're building in the transparency that the Prime Minister and the government wants, but that is the only way we will be able to invite and welcome foreign capital and domestic private money coming into the ecosystem. I think it's very critical.
Well said, and I think it is critical, and we do hope that that this doesn't get lost in tax administration. But Karthik Reddy, let me give you the final say. You know, irrespective of what the budget does or doesn't do on the long wish list that we've put together, actually it's not that long. It's a fairly short and a consistent wish list that that the startup ecosystem has had for the last few years. But you know, if this doesn't go through, what do you believe is the prognosis? What's the road ahead looking like for 2021? How would you sum it up? What's the mood like?
No, entrepreneurs are gritty. I think we've reached an era where, you know, because of innovations and infrastructure, whether it's UPI or Geo, entrepreneurs have leveraged that and brought in 500 million people into the digital ecosystem. It will get to 1 billion at some point. So we are resilient as both consumers and entrepreneurs and small businesses. I think that's the, you know, fundamental strength of our ecosystem. They'll keep building. The question, I think, is how do you know, in an era of UPI and, you know, workers being remote and fluid, we can't be debating whether ESOP should be only given to employees, whether capital which is wanting to come into companies needs to get exited to IPO. Why are we putting bottlenecks in those processes? So easing capital flow, easing people flow will just open up the entire economy like never before. And that's the lens with which everything has to be seen, in my opinion. And that's all we're asking for. Every ask is either in one of those two buckets.
All right, Karthik Reddy, Abhiraj and Padmaja, many thanks for joining us here. Yes, we hope that everyone has an open mind, and more importantly, that they're listening to what you have to say and hopefully take forward what you've detailed. Abhiraj, Karthik and Padmaja, always a pleasure. Many thanks for joining us here on this special edition of Young Turks. We're going to take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.